Let me ask you a simple question that might change everything you think you know about money. Why do rich people get richer every single year, even during recessions, pandemics, market crashes, and economic disasters, while everyone else is just struggling to keep their head above water? Is it because they work 80-hour weeks? No, some of the wealthiest people barely work at all. Is it because they're smarter? Not necessarily. Plenty of brilliant people die broke. Is it luck, inheritance, secret connections? No, and no. There's one specific asset class they own that quietly, systematically multiplies their wealth every single year, and the vast majority of people never even realize what it is. Robert Kiyosaki, the author of Rich Dad Poor Dad, one of the best-selling personal finance books of all time, has been warning about this for decades. He's been shouting it from the rooftops. And today, I'm going to break it down for you in a way that finally makes sense. By the end of this video, you're going to understand the one asset that automatically makes rich people richer, why middle-class people almost never own it, and how this asset actually grows stronger during inflation, taxation, and economic crises, the very things that destroy everyone else. Our entire relationship with money is about to shift. Let's get into it. First, we need to destroy the biggest lie being told about wealth. Most people genuinely believe that wealth comes from getting a high-paying job, climbing the corporate ladder, working hard for promotions, saving money, diligently playing it safe was a 401,000, being responsible and conservative was finances. This sounds reasonable, right? This is what parents tells their kids, what schools teach, what society reinforces every single day. But Robert Kiyosaki says this is the biggest financial trap in existence. Why? Because jobs have hard limits. You can only work so many hours. There's a ceiling to every salary. And when you stop working, the money stops. Savings accounts lose value year after year to inflation. That safe money sitting in the bank, it's getting destroyed. Playing it safe was traditional retirement accounts, means you won't see that money for decades, and by then, who knows what it'll be worse. Kiyosaki realized something that changed his life. The rich don't focus on income, they focus on assets. That's the fundamental difference. That's the game changer. Income is temporary, assets are permanent. Income requires your time and energy. Assets work for you 24/7. Income stops when you stop. Assets keep going. And here's what most people miss. The rich don't work for money. Money works for the rich. Think about that. Really think about it. When you work a job, you trade hours of your life for dollars. The rich flip that equation. They use dollars to buy things that generate more dollars automatically, continuously, without them lifting a finger. This is why a doctor making $500,000 a year can be broke, while someone with a modest business portfolio never worries about money. The doctor trades time for money. The investor uses money to make money. Completely different games. So what is this mysterious asset? It's not salary. That's income, not an asset. It's not the house you live in. In fact, Kiyosaki would tell you that's a liability. It's not a fancy car, a boat, or expensive watch. Those are definitely liabilities. What is it? The asset is cash-flowing asset, specifically assets that do three things simultaneously: produce regular income, they pay monthly, quarterly, or annually, grow in value over time. Appreciated pay your salary primary your to pre your time. They're passive or semi-passive. Kiyosaki as a brilliantly simple definition. It puts money in your pocket. It's an asset. It takes money out of your pocket. It's a liability. That's it. That's a filter. Your primary residence takes money out every month's mortgage, taxes, insurance, maintenance. Liability, A rental properties that generates $500 more than its expenses every month. Puts money in. Asset. A business that pays you profit distributions puts money in an asset. Stocks that pay dividends puts money in asset. Royalties from intellectual property, books, music, patents puts money in asset. Rich profile of these income generating assets. Here's the key. Before I buy a lifestyle, new class people apply. They get to big highs, the mice kai. The ich bin vacation and then wonder why you always stressed about money. The rich buy assets first, then he let those assets pay for a lifestyle. Same money, completely different strategy, completely different results. Now here's where it gets really interesting and maybe a little frustrating. Every single year, the rich get richer almost automatically. Not because they're hustling harder, because of how assets behave. Let's break down exactly what happens. Rich people own rental real estate, operating businesses, dividend-paying investments, royalty streams, private equity, income-generating assets of all kinds. Know what happens every year. Rent increases, property values go up. Landlords raise rents. Was inflation or market demand? The rich who own rental properties see their income rise automatically. Business profits grow. Even modest growth of 5-10 annually compounds powerfully. A business generating $100,000 in profit grows to $110,000, then $121,000, and so on. Without the owner working more hours, asset prices appreciate. Real estate historically appreciates. Businesses grow in value. Investment portfolios compound. The networks of asset owners increases while they sleep. Inflation works for them, not against them. This is critical. When inflation hits 3%, 5%, or even 7%, workers feel the pain. Everything costs more, but salaries don't keep up. Savers get destroyed. Their cash loses purchasing power, but asset owners, they win. Why? Because their rents go up. Their business prices go up. Their asset values go up. Their debt gets cheaper. In real terms, inflation is kryptonite to workers and savers. Inflation is rocket fuel for asset owners. So while the middle class is complaining about rising costs, the rich are literally profiting from the same economic forces. Same economy, different position, different outcome. The middle class feels poor every year because inflation erodes their salaries' value faster than raises come. The rich feel richer every year because their assets automatically adjust for inflation and often exceed it. It's not a conspiracy. It's not evil. It's just financial positioning. And here's the part that makes people uncomfortable. Most people will never figure this out. They'll work 40 years, save diligently, and retire with less purchasing power than they started with. So if the rich own assets, what does the middle class own? Unfortunately, the middle class owns liabilities, things they think are assets but actually drain their wealth. The average middle class family owns a mortgaged home, their biggest asset, financed cars, credit card debt, student loans, consume debt of all kids. See, genuinely believe their house is building wealth. But Kiyosaki would say, if you're paying for it and it's not paying you, it's not an asset. Your primary residence costs you a mortgage payment every month, costs you property taxes, costs you insurance, costs you maintenance and repairs. And when you sell it, where are you going to live? You buy another one. Does it generate income? No. Does it put cash in your pocket monthly? No. It might appreciate, sure, but until you sell it in downsize or move somewhere cheaper, that appreciation is locked up and theoretical. Meanwhile, the rich buy investment real estate first. They buy a rental property that cash flows months. That property pays for itself and generates profit over time. They buy another one, then another one. Eventually, Their rental income exceeds their living expenses and they buy their dream home and their assets pay for its same desire for a nice house. Completely different sequence. The middle class buys the lifestyle first, then struggles to maintain it. The rich builds the asset base first, then the lifestyle becomes effortless. It's a trap most people never escape. They're so busy paying for liabilities that they never have capital left to buy assets, and the cycle continues. Now we get to the part that really makes people angry. Kiyosaki famously says, "Savers are losers." That sounds outrageous. That sounds irresponsible. We've been taught since childhood to save money, be frugal, and build up our savings account. But let's look at the mass because mass doesn't care about feelings. Currently, inflation averages 3-6 per year and recently has been much higher. High-yield savings accounts pay 0.5-1 maybe 4%. You're lucky right now. That means every single year, your cash is losing purchasing power. If you have $100,000 in savings and inflation is 4%, you're effectively losing $4,000 in real value per year. Your bank statement says $100,000, but its buying power is now $96,000. Next year, $92,160, and so on. You think you're being responsible, but you're being quietly robbed by inflation. Now compare that to assets. Real estate historically appreciates 3-5 annually, plus generates rental income. Business can grow 10-30 per year. Stock market has averaged about 10% annual returns over the long term. Dividend paying stocks give you cash flow and appreciation. The rich don't save money in the traditional sense. They store wealth and assets. They convert cash into things that appreciate faster than inflation, produce income, protect and grow purchasing power. Cash is a tool, not a destination. It's meant to be deployed into assets, not hoarded. Does this mean you should have zero savings? No, you need an emergency fund. You need liquidity for opportunities, but the mentality shift is everything. Cash is temporary fuel. Assets are permanent wells. The savers of the world work their entire lives, stash money away, and retire with less real wealth than they started with. The asset builders work smarter, convert income into cash-flowing assets, and retire with income streams that last forever. All right, now we need to talk about something that makes most people genuinely angry. The tax system favors asset owners, and no, it's not a loophole. It's not cheating. It's literally how the tax code is designed. Here's the difference. Employees get their paycheck. Taxes are what's held first. They live off what's left. Almost no deductions. Pay the highest tax rates. Asset owners generate income from asset to business expenses first. Pay tax on what's left. Utilize depreciation, write-offs, and tax advantage strategies often pay lower effective tax rates. Real estate investors, for example, can write off mortgage interest, property repairs and maintenance, travel to and from properties, home office expenses, professional services, and here's a big one, depreciation. The IRS lets you deduct the theoretical wear and tear on the property, even while it's appreciating, and value. Business owners can deduct equipment, software, marketing, meals and travel, employee salaries, health insurance, retirement contributions. Does not that the rich are gaming the system? There is in the system exactly as it's designed. Kiyosaki puts it perfectly. The tax code is a set of incentives. The government wants you to invest, build businesses, and create jobs. The rich simply follow the incentives. Employees have no incentives, they just pay, but asset owners, they rewarded for taking risk, creating value, and investing capital. Is this fair? That's a philosophical debate, but it's reality, and if you want to build wealth, You need to play the game by the actual rules, not the ones you wish existed. Now here's where we go a layer deeper. The most powerful asset isn't just real estate. It's not just businesses. It's not even cash-flowing investments. The most powerful asset is financial education. Without financial education, assets look risky and scary. Cash feels safe. Fear controls every decision. Opportunities are invisible. You repeat the same patterns everyone else does. With financial education, risk becomes manageable. Opportunities become visible. Confidence replaces fear. You make decisions from knowledge, not emotions. You rich invest in learning first. The middle class avoids financial education because it's complicated or boring. But here's the truth. What you don't understand controls you. If you don't understand taxes, you overpay. If you don't understand real estate, you miss opportunities. If you don't understand business, you work for someone who does. If you don't understand investments, you leave your future to chance. Kiyosaki's entire philosophy comes down to this. Financial literacy is a foundation of wealth, not hustle, not luck. Knowledge. Rich read books, attend seminars, hire mentors, study markets, and continuously educate themselves. The middle class watches Netflix and hopes their 401,000 works out. That's the difference. And the best part, financial education is available to everyone. Books cost $20. YouTube is free. Courses are accessible. The barrier isn't money, it's mindset. Let's talk about time. Jobs trade time for money. You work an hour, you get paid for an hour. You stop working, the money stops. This model has a fatal flaw. Time runs out. You can't work forever. Your energy declines. Your health fails. Eventually, you have to stop. And when you do, what happens? Social Security, a modest 401,000, hope and prayers. Assets, on the other hand, trade money for more money without your time. A rental property generates income while you sleep. A business pays you profit distributions whether you show up or not. Dividend. Stocks deposit cash into your account quarterly. Time doesn't run out for assets. Assets compound. That's why employees burn out. They're stuck in the time for money trap. Asset owners get free. Their wills grows without simps. Middle class works 40 years and retires with just enough to survive. The rich build assets for 10 to 20 years and retire with passive income that exceeds their expenses forever. Seen lifespan. Completely different outcome. So here's a moment that changes everything. Kiyosaki says that wealth begins when you start asking one specific question. How do I buy assets that pay me every month? Not, how do I earn more at my job? How do I save more money? How do I cut back on expenses? But, how do I own more cash-flowing assets? That question shifts everything. It changes how you see money, how you spend it, how you invest it. When you ask that question consistently, you start noticing opportunities everywhere. That duplex down the street could be a rental. That side project could become a business. That skill could generate royalties. That investment could pay dividends. World looks different when you're hunting for assets instead of chasing paychecks. And that shift, that mental reframe, is the turning point between staying middle class and building real wealth. Let me leave you with this. The rich don't wait for perfect conditions. They don't play it safe. They don't trust salaries or pensions. They build assets early. They start small, and they let time do the heavy lifting. If you don't own assets, not just any assets, but cash-flowing assets that put money in your pocket, you will work forever. That's not a scare tactic. That's just math. And if this video made you uncomfortable, good, because comfort is what keeps people poor. Wealth doesn't come from working for someone who owns assets. It comes from only the assets yourself. Learn about the asset class that makes the rich richer. Study it, understand it, and most importantly, start building it, because every year you wait, the gap between you and the wealthy widens. The asset is waiting. The question is, will you claim it? Thanks for watching.